into it. As you probably know, NIO is an electric vehicle manufacturer located over in China, but they are rapidly expanding to multiple other regions across Europe. NIO, ticker symbol NIO, is a phenomenal electric vehicle stock investment which recently delivered 18,012 vehicles during the month of December in 2023, which represents an increase of 13.9%. And this excited investors where their share price popped a little bit because they're only trading at around $9 per share. Now, the best part, in my opinion, is that they delivered approximately 50,045 vehicles during the fourth quarter of 2023, representing a 25% year-over-year increase. But when we take the entire year into consideration, we saw that NIO delivered 160,038 vehicles, which equates to a year-over-year increase of 30.7%. And if you remember in a previous video, I told you during the second half of the year, that's when NIO is really going to start to shine, and that's exactly what we see. On screen right here, you can see their monthly deliveries. And in the first 6 months of the year, you can see that their overall deliveries were not that impressive from January through June. But as soon as July hit, we saw July through December do absolutely phenomenal, which is exactly what we predicted on this channel. So it's great to see our predictions end up coming true. But what this means for NIO stock is still up for debate among professionals. But we do see multiple growth catalysts happening for this company and a huge news catalyst such as NIO unveiling an electric vehicle battery with 621 miles worth of range, which beats Tesla vehicles. The CEO of NIO, named William Lee, recently showcased on a live stream that he traveled 14 hours in one of his electric vehicles, showcasing just how long his electric vehicle batteries last compared to their competition. The reason he did this was to show investors and various people throughout the market, as well as their competitors, that their electric vehicles are going to have a groundbreaking 621-mile electric vehicle battery range. And this groundbreaking technology is coming straight from NIO, and it's the first of its kind to last so long. You should also know that the CEO actually said that after the 14-hour-long drive, their battery still had 3% left in it, meaning that the total range was actually closer to 648 miles, which is even greater than the 621 miles which were advertised. But that's not all. You also need to take into consideration that the 648-mile drive also still had 3% battery left, so we can increase that 648-mile drive by another 3%, and then that's the total of the amount that this vehicle can actually go on a single charge. Let me say that again. He did not need to stop to recharge the electric vehicle while driving on this 648-mile trip, because a lot of people are discouraged from buying electric vehicles because they don't get very good range. But with NIO's new 150 kilowatt-hour battery, range is no longer a problem, and that's why NIO has plans to start to mass produce this 150 kilowatt-hour battery in April of 2024. The battery alone is quite expensive, coming in at $42,000, but NIO understands that this is a large chunk of money, so they actually give purchasers the option to rent their battery for the vehicle, which decreases the overall amount that they would have to pay for this battery. And this also allows the battery to be swapped out at various charging stations. So not only is NIO's electric vehicle battery extremely competitive in the market, and honestly a market leader right now, but when we compare NIO to Tesla, it gets even better for NIO. We also know that NIO has very competitive prices for their electric vehicles, thanks to the fact that they're offering their customers the ability to rent their electric vehicle battery instead of buy it outright. And that's why they are not only very competitively priced, but their technology is also mind-blowing. So let's quickly compare NIO to Tesla. Tesla's electric vehicle batteries, on average, last for approximately 336 miles on a single charge, with the Model 3 having the lowest EV range, which lasts around 267 miles. But even when we take into consideration Tesla's Model Y, which has a range of about 330, this does not compare to NIO's overall ability to go over 600 miles, or approximately 650 miles. But let's give Tesla the benefit of the doubt out. Let's compare the Tesla Model S to NIO's longest range battery. Tesla's Model S has the longest range, lasting around 405 miles, but this still pales in comparison to NIO's overall battery technology, which lasts around 650 miles, according to William Lee's overall live stream, where he drove 14 hours to show customers, consumers, and their overall peers just how innovative NIO truly is. Now, don't get me wrong, I own way more Tesla than I do NIO, because Tesla is more than just an electric vehicle company, but I do like to see how NIO is rapidly innovating and competing against a market leader like Tesla. So now let's move on to why NIO shares have been on a roll lately, posting double-digit gains. The shares of NIO stock have surged by around 12% just in the last week, and their share price is only around $9 per share, while various analysts dispute on what this company's share price should actually be. For instance, very negative analysts believe this company could fall to around $7 per share over the next 12 months, while others believe it could surge up to around $21. And either way, it seems that there is a bright future for NIO stock. We should also take into consideration that NIO is located over in China, which is the EV market capital of the world. Electric vehicles are very prominent over in China, so they are at the heart of this overall market. We also know that their share price increased due to their NIO Day, which was an event held in late December to where they had a chance to present to their investors just what's on the horizon for this company as they expand their overall market share. For instance, they gave updates on their new executive flagship ET9 sedan, which is anticipated to be priced at $112,000, and they anticipate to begin sales of this ultra-luxurious vehicle in 2025. NIO also highlighted their in-house technology across a variety of new vehicle lineups that they are anticipated to release into the market, but as an investor, you should know that this company is not yet profitable. But similarly to Tesla, when Tesla was not profitable, it's only a matter of time before this company does become profitable, but let me tell you, the next few years are going to be very volatile for the overall share price for this company. But once the company really gets going and achieves profitability, the sky will be the limit, just like what happened with Tesla, but most likely to a much lower degree, because Tesla is just its own special type of animal. We also saw that NIO announced a close of its $2.2 billion equity investment from Abu Dhabi-based investor CYVN Holdings. And if you didn't know, CYVN is a huge supporter of NIO, to where they have approximately a 20% equity stake in this electric vehicle manufacturer. And the CEO of NIO, who again is William Lee, stated, and I quote, "With the enhanced balance sheet," referring to the $2.2 billion equity investment which they just got, "NIO is well prepared to sharpen brand positioning, bolster sales and service capabilities, and make long-term investment in core technologies to navigate the intensifying competitive landscape," end quote. These are very inspiring words from the CEO, especially as competition continues to heat up over in China or just in the overall electric vehicle market in general. I really like actually that NIO is located over in China, because according to global data, almost 27% of vehicles sold over in China were electric vehicles. And when we compare that to just 8% over in the United States, clearly NIO is located at the heart of this overall rapidly expanding market. And this explains the recent surge in NIO shares that we have witnessed. But now let's talk about their overall fundamentals. What can we as investors anticipate for this company over the long term? Well, recently a lot of investors have been interested in NIO, considering that the share price is relatively cheap, even though analysts disagree on where this company is headed in the future. Their shares have already returned around 30% just over the last month, versus the S&P 500, which is only up around 5.3%. And what's very bullish and positive is that when we compare NIO's success to the overall foreign automotive industry, that has only increased around 0.4% during the same period, so NIO is performing very well in regards to their overall share price. We also know that for the current quarter, NIO is anticipated to post a loss of 50 cents per share, indicating a positive 2% change from a year ago, to where the consensus earnings estimate is a loss of $1.67 for the current fiscal year. And let me tell you, that is going to hit this company's share price hard. So maybe you should wait before you dive too heavily into this company. But luckily next year, they're anticipated to really start getting the ball rolling in regards to their earnings per share. For next fiscal year, their loss of $1.67 per share is anticipated to lower to only a loss of $1.21, which indicates a 27.9% increase, which is very good. This is going to be the start of the company rapidly growing their overall bottom line. And although arguably earnings is the best indicator of a company's overall financial health, let's quickly talk about the revenue that they're going to bring in. In NIO's case, the consensus sales estimate for their revenue for the current quarter is that the company is anticipated to bring in $2.29 billion, which is not ideal because it actually equates to a year-over-year change of a loss of 1.9%. However, when we take into consideration what they could bring in next fiscal year, the range is $8.12 billion to $12.29 billion, which would either indicate an 11.8% increase or a 51.4% increase respectively, which is a huge improvement. Normally, NIO does not beat on their overall revenues or earnings per share, but this should really excite investors because not only are they scaling their overall revenue, but they are increasing their overall profitability as time goes on. Honestly, it's just a waiting game. If NIO can survive long enough until they become profitable, then the sky is the limit for this company. But the problem is that this company is going to be extremely volatile until that time. And the last thing we would want to look at besides their earnings and revenue is their overall current share price compared to their valuation. And thankfully, Zacks has a value style score rating system, which pays close attention to both traditional and unconventional valuation metrics to grade stocks, to where an A rating would be a very good buying opportunity according to the company's valuation and their share price, and an F rating would not be so good. NIO actually has a grading of C, which indicates that this company is trading on par or equal to their other peers in their industry. But overall, NIO does have a buy rating according to analysts. But I would always encourage you to do your own research on this company because this is not a get-rich-quick company. This is a company that you would buy and experience major volatility in the short term, but as the years progress, this company should make you loads of profits. But with all of that being said, don't forget to go and annihilate that like button right now. Comment your thoughts down below. Subscribe if you are new. Go ahead and become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.